I'm sure you're watching in awe to see all of this trouble playing out, all the doomsayers coming to the fore. This nuclear meltdown is going to spread and dire situations. And even Angela Merkel shutting down some nuclear power plants.
Crazy. Why would she do that? I mean, are they expecting an earthquake in Germany? I mean, that's the point here, surely, is that the generators, the nuclear station, have been running for 40 years, but they just had a earthquake followed by a tsunami, which blew all of the backup systems out the way. So why the Germans want to go and do this, I think it's irresponsible.
So this is what's now going to happen. I suppose everyone's going to be talking about the viability of nuclear energy going forward. And this is why coal prices are doing quite well.
Coal prices doing well, wind power companies doing well, solar companies, photovoltaic companies through the roof. And uranium and anything associated with it, GE, which is a major manufacturer of these things, down heavily in New York. But, you know, that I don't have a problem with, because clearly that's, you know, warranted in so far as there's been a significant change. What I'm more irritated by is the sort of wholesale panic selling that happens in a market environment like this.
But it gives you an opportunity to get in, Paul.
It does, that's true. I mean, we bought one client nearly 5 million rands worth of equities, a fresh new cash portfolio this morning. We had clients adding significantly to a couple of key stock holdings. So it's true, we do that. And it's because, of course, there are people who are just selling indiscriminately baskets.
I mean, when you've got the Nikkei falling 11%, when you've got General Electric down around 6%, by the way, it's the company that designed all 6 of the reactors at the Fukushima
Fukushima. It's also the parent of our franchise owner, NBC.
Let's also disclose that, Paul. You know, when you've got such massive selling, who is selling? I mean, you've got to have these big institutional guys.
Well, of course, there are hedge funds and others who take positions. There are also long-only pension funds in the institutional environment who buy downside protection. So they call their favorite investment bank and they say, write me an ALSI put option at that level. The bank, in turn, goes into the market and sells baskets. So they just indiscriminately hit the stocks in the baskets at the required ratios in order to effect that necessary protection. And you can see it. So even stocks that are normally quite liquid start gapping down. And that's the obvious opportunity to come in and buy. Of course, you don't know for sure what's coming around the corner. I mean, I will concede that on Friday evening, it looked like a natural disaster, which was going to be very costly in terms of human lives as well as in terms of property. But now this nuclear thing adds an extra and very negative dimension.
It's a light water nuclear reactor, so very different to the Chernobyl type scenario that could play out. That is being disputed.
The Chernobyl one, they had a guy sitting in a deck chair with a corrugated iron roof and the thing basically blew up. I mean, they had no security systems. So the whole area got totally ruined.
So overreaction,
this is completely different. Well, I don't know. You mean, you have to wait and see. What I'm reading, and I think you're reading the same stuff, suggests that this thing is negative, not great, but that it's going to kind of settle down. And if that's the case, I think we'll see a strong equity market rebound.
That in Japan, the 10-meter radius was obviously evacuated, 20, looking at 30. It's getting wider and wider. And now there are winds blowing towards Tokyo and apparently panic evacuations and aftershocks.
So I mean, not too fabulous.
Also interesting to note, and I have to say, Paul, I was talking to you about US Treasury yields and how they're getting closer and closer to 4% and then 5%, and if it breaches 5%, then we're all in trouble.
Right.
So good news for you, we're seeing US Treasury yields 3.2%.
So I guess it's that safe haven trade that Chris is talking about, where people are like putting money back in treasuries at a time of uncertainty. I don't know. I mean, the safe haven thing is always a bit freaky because gold is supposedly, you know, the safe haven. That's not doing so well.
But we've seen this before, because when we did see the market meltdown in 2008, we actually saw gold coming under pressure anyway. And where we did see buying is US Treasury yields, people liquidating positions to cover losses elsewhere.
Cover losses, exactly. They're taking their losses. I think you're right. I think the old days where people would kind of retreat to safety is not so much anymore. I think gold is a traded commodity just like any other. So there's borrowed money chasing returns in gold. That's out the window now, so you've got to be yanking that in. I think there's just generally a taking of risk off the table in an environment like this. So almost anything that was bought with borrowed money is being thrown out the window. And that's got uncertain complications and implications until such time as we hit some sort of more normalized.
Demand destruction, the words of Bevan Jones a little earlier.
For what? Commodities, physical commodities? Yes. I think there's an element of that. So if the world's third largest economy, $5 trillion Japanese economy, you know, it's not that big by comparison to the US, which is 15, and China, we know, just passed Japan, but it's definitely not insignificant. You know, if there's a big withdrawal of consumer spending and all of that, but, you know, I must say, I just don't see it. We've got stocks in the US like Callaway, which makes golf clubs, and Japanese are mad about golf. So now they're saying, okay, that stock needs to be sold off heavily. It's not as though the Japanese are never going to play golf again. I mean, you know, once they've had a week off, they're going to start playing golf again.
It's not going to be a week. It's probably going to be about a few years. Paul,
I don't know,
have you been watching? Have you been watching TV?
Maybe 2 or well, in that area, I think the golf course is gone. But I'm not saying. I think the fact is they got golf courses elsewhere.
You look very well rested, and I don't look well rested because yes, I have been watching this story very closely. You're not staying up at night worried about this and worried about the fact that the JSE lost again 2.25%.
You know, it's the news and the events change. It's the reaction to them, and whether you see the opportunity or the crisis that differs.
Did you expect anything less?
In a market environment like this, they're going to be, the bears are going to be having a field day. They're going to be running around, putting out their favorite news stories, showing how the world is about to end. But you know what? It's not. The sun's going to come up tomorrow and next week and the month after that.